I get a lot of questions about what it takes to become a consistently profitable trader, but so many people focus on the end product, the end result, and they ignore the process. They ignore what it takes to get started and go through that journey of becoming consistently profitable. So today I'm going to fly out to New York and we're going to catch up with Adam Grimes. Adam Grimes is one of the most respected and successful technical traders on Wall Street. He's worked with prop firms, he's featured in the media, he's the author of multiple books, and if there's anyone who's going to give good insights into the whole journey from start to finish, it's Adam. So let's go and see what he has to say. All right, welcome to the video. Today I'm catching up with Adam Grimes. Adam Grimes is a well-established trader, been trading for over 20 years, multiple markets, came from the bottom, like many people. He's since worked at prop firms, he's featured in the media, he's an author of 2 books, and he's about to write his 3rd, hopefully.
Working on it.
And I just want to welcome Adam Grimes. Thank you for coming on. So, firstly, Adam, you destroyed one of my theories that creative people can't be technical people.
Yes. Yeah.
And Adam is a classically trained chef and musician. And how do you find the transition between being so creative and technical at the same time?
I find it to be a very easy transition because I think that, there's a lot of misconceptions there. So swirling around what creativity is and what musicians do. And when you're a musician, you are working on minute details. For instance, as a classical pianist, if you're working on a Beethoven sonata, it would not be unusual to spend literally 4 to 6 or more hours a day on what actually would be a few seconds of music.
Right.
So you're playing it over and over, hundreds, maybe even thousands of times, and then to come back to it tomorrow, in context with other things, but you're really working on details. You mentioned the cooking. When you're working on the line, there's a phrase in cooking, mise en place, which in French means everything to put in its place. And it's common sense, but it's the difference between life and death in the kitchen. You do all your prep work and everything is laid out. So there's this idea of putting things in order on kind of their basic atomic level and then working from there. I also, it is interesting though, because there is this idea that you are either a verbal person or a mathematical person, right? One thing that I did see, and that doesn't change through our life, that's what we're taught. Mine did change, actually quite dramatically, because my test scores when I was much younger were strongly verbal. And then after several years of focusing on markets, when I went to business school and did another fun round of standardized tests, my numbers had skewed in exactly the opposite direction. So I think maybe, on some days I'm a competent writer. I think some of my writing's okay, but so I do think maybe I kind of cover some of these things in ways that aren't totally normal.
Tell us a bit about how you got into trading yourself.
Well, I got into trading. It's kind of an interesting story because I think no matter where somebody were to start, you can't start worse than I did. You can't possibly know less. You can't possibly make more mistakes than I did. I graduated from college and was working as a musician, and I got this essentially scam flyer in the mail.
Not everyone is fortunate enough to know my techniques of how to make a lot of money.
This was in the day before all the scams now very efficiently come through the internet. They actually came in the US mail, and it was this nice booklet with this guy in a cowboy hat that was telling me how to corner the cattle market with a few $1,000s. And the way you do that, I'll give the secret away, is you buy a contract, and if it goes up, you take your profits and you buy another one. And with that plan, you can start with one and eventually own like 50,000 cattle contracts. And you very easily, we could draw out a theoretical plan where you start with $1,000 and you make 5 or 6 billion in a single trade. That's the way the math works. Of course, we know why that doesn't actually work. It's because your P&L is so much more leveraged as you add. And I knew, there was a lot that I didn't know, but what I did know was that it wasn't going to be that easy. You know, I knew there had to be some element of at least semi-scam there. That went on for a while, and then I took a break from mostly took a break from trading and music because I always wanted to do the chef thing. So I got a culinary education and did an apprenticeship with a French chef who himself was a disciple of Paul Bocuse. So I learned the real mainstream classical French tradition. I was always into cooking, but I learned to do it right.
Yeah.
And the upshoot of that was that I missed the whole run up to the .com crash. And I was basically out of the market. And I remember being at a Christmas party, and literally a preschool teacher told me she was quitting her job because she had run her $3,000 account into a $50,000 account. And she was going to make $1 million next year. And I thought I'd get back in the market. This is the end. like this is, I knew enough from my struggles to know that this can't be real. But I missed, again, here's maybe something I was very fortunate because I do know many, many people who were present in those last years of the 1990s who were then unable to continue after the 2001 thing happened. And many of my trading friends through the next decade, from 2000 to 2010, was kind of a gradual process. I mean, it happened before 2010. They were really out of, and we know why. It was a gradual process of those people giving up because they too had learned that you simply buy the tech stock they're talking about on the message board, and it will go up. That's how the market works. It's very simple. So when I came back in the market, that was when I started day trading the S&P futures, which was a brutal re-education. And I could do nothing right. And it was, in retrospect, what was it? Was it every time I've changed to a new asset has been a significant learning curve. I do think, so we could have a whole multi-hour discussion about how do trading skills translate. And they do, absolutely they do. But there's also a lot that's different. For instance, there was a period where they changed the rules in Chicago that a lot of the people who were day trading S&P futures could no longer do so. So they went to the soybean pit. And they said, we're going to take our skills here. They got slaughtered. Absolutely. It's a different market. And
a lot of the Wall Street traders who were used to the pits, when it went to online trading,
they can't do anything. And I've worked with a number of those people, some of whom have been able to make the transition quite skillfully, but the vast majority of which I have to say have not. And the reason is because when you're on the floor, it's a different edge. It's not. One of your edges is absolutely no transaction costs. You can pretty much get in and then scratch the trade very easily if it feels wrong. So the idea that we'll be dealing with real bid and ask spreads, which on the floor you are basically on the other side of that, it is an issue. And also the idea that you have to predict market direction because if you're on the floor, frankly, like a lot of kind of underhanded stuff happens. There are people who trade for themselves. This is mostly in the past in almost all markets here. And then there would be brokers who would have big customer orders. And you could learn to read the broker, right? If the broker gets a big customer order, and if he's your friend, he might be like, hey, maybe you should buy some. Because he knows he's going to buy a lot and it's going to go up. And you have some kind of edge like that you can't replicate off the floor. So it is a radically and completely different thing. So I think part of what I was struggling with was just the natural transition to a new market. But also I think it was a brutal time. I think it was the volatility in the S&Ps, not the volatility per se, but the volatility of volatility. So understand what I mean? Like you would have incredibly boring quiet periods where maybe ranges would be 4 to 5 points, and then you'd have ranges be 30 points. And as a trader, you have to navigate that somehow. You can navigate it lots of ways, but maybe it was just me being out of the market for a long time too. I suspect it was also me not really knowing how to trade. I think the British pound experience was largely luck. There certainly was. I had no I had no concept of, well, we didn't really talk about fundamentals. Early on, back before I figured out how to make any money, I realized that maybe there's more to markets than technicals. So I started to learn about fundamentals. I grew up in a farming community, so I had some idea of production cycles. I knew how different grains might, in some cases, substitute, might not. I knew how different animals would come to market at different times, how they would eat different things. So I thought I had some understanding of that, and I had this idea. I learned a little bit about fundamental modeling, and I thought if I could really understand supply and demand, I could predict what cattle prices should be. And that very quickly became a dead end because I realized I am never going to know as much about cattle prices as the farmers. There's no way. There are people who have, those markets actually exist for insider trading. In the US, we're very focused in stocks on avoiding insider trading, but by definition, commodity markets are insider markets. You're trading against somebody who knows a hell of a lot more than you do in every way. And so I really, at that point, completely got rid of fundamentals. And I said, and my experience, we talk about those early anchoring experiences, the first real money I made was purely technical. So when the British pound thing happened, I didn't really know what was going on in the world news-wise. I had to say, like, oh, okay, there's something's going on. And so I think I just didn't really understand how to put all of these factors together and think about it all. But eventually I figured out the S&Ps, and that was really where I think it was in that phase, which was not quite, it wasn't 10 years of trading, but it was more than 5.
Yeah.
It was certainly more than 5 years of solid trading before I really had skills.
Okay. And how long does that process take before you become profitable?
Well, in my experience, and this is working with a lot of different traders, I think it's 3 to 5 years. Mm-hmm. It's a very unpopular answer. For obvious reasons, right? And I don't know quite why it's 3 to 5. To be perfectly honest, shouldn't there be some way we can supercharge this? That we can model and build trading skills, and I've never seen that be particularly successful. The only place where I could really see it working would be in more of a rigid institutional framework, where you've
got accountability, right?
You've got accountability. You're basically. And you're not really making decisions. You're at first you're getting coffee, and then you're putting numbers in a spreadsheet. You're seeing people do what you eventually want to do, and then maybe they talk to you about decisions, and then maybe you get some input. But it's still, even that road is a very long process to the point where here's your account, here's your risk. So, and even on the floor, you think about it on the floor, like the way it would work was, people would go and work as clerks for $10,000 a year, living in Manhattan. You can't. You're living in a rat hole. And of course that was years ago, so 10,000 was more than now. But it was still, you were being paid peanuts. And after you were there for a long period of time and made friends, some guy was like, "Hey, you want to trade? I'll give you a stake. I'll back your trading." But still, by the time you got there, you'd seen a lot of stuff. And you'd been around a long time. So I really don't think there's any way. You hear different numbers. People say 6 months. People say a year. But I really think it's 3 to 5 years. And then honestly, it's probably longer than that before you kind of develop wisdom. Like I said, I know that that's not a popular answer, but I think it's a reality.
And when you actually, I know I've heard you say that you're more of a swing trader, or you were more of a swing trader.
I've certainly.
I know you trade different styles now, but the point of the question is, you developed a trading system around your personality because the fast track trading wasn't working for you.
Well, it was, so that's not exactly the case. So it was, so like I was doing pretty well with the S&Ps, and then I derailed that to go to business school. So but when I was in business school, I would sit in classes where we were learning about the efficient market and how traders couldn't make money, and I would scalp bond futures through the whole class. So, I'd certainly done thousands of trades as a short-term trader with success, but it was more a lifestyle choice. I really don't want to stare at the screen every moment the screen is open. No. Nor do I have to. You know, that was also really the revelation that I would be scraping out my money, grinding out my money day trading, and I would do these swing trades on which I would spend maybe a total of 10 minutes, and I would make a lot more money.
Yeah.
And I thought, you know, like, so you're born, you live, eventually you're going to have a heart attack and die, right? Like, I mean, that's the arc of all of us. Like, how do you want to spend this time you're here on the planet? Do you really want to get up at 8:30 in the morning and stare at the screen until 5 o'clock at night every single day? Do you want to be tied to that? And what happens, you know, and I was younger when I was doing this, but you know, what happens in 30, 40 years when you can't sit at the screen like that, when you can't see as well? And what if you just don't want to do it?
Yeah.
Yeah. And so I migrated to a longer time frame. And I think swing trading, you know, we say swing trading and we all know what we're talking about. We're talking about trades that last a few days to a few weeks. But I would argue actually that swing trading is really an approach more than a time frame. So like you could be a swing trader on a 5-minute chart. The idea with a swing trader, in my thinking at least, is that you just don't want to tolerate much give back. So, you know, you're not a trend follower. It's going to be pretty happy to get into something, see it go way up and see it come way back down. If you're trend following, you have to do that. And by the way, we can have a discussion about that approach too. But if you're a swing trader, you're not really into that. You want to try to take a clean piece out of the market. And that means getting stopped out on a lot of those little reversals. You know, you were stopped out there. Well, you can't sweat it because over time you're going to build a big pile of money doing that. So as a combination, I was always a swing trader. You know, even when I would say that I was scalping, what I was doing was I was swing trading a 1-minute chart or swing trading a few thousand tick chart or something. So I was still, I always had that, but I just discovered that if I could move to a longer time frame, my life was a lot better. And it's a significantly different psychological framework too. You know, what time frame do you trade on it?
4 hour, mainly in 60.
Okay, so you're swing trading on okay, but you know, if you're trading on a 5-minute chart or a 15-minute chart, you got to be very reactive. You know, as soon as something doesn't look right, you walk away from it. But even on the 4-hour chart, like a lot of times you give it the benefit of the doubt. You know, it's like, okay, my stop's here. I don't really know what's going to happen, but we'll let it work out. Even though I just said swing trading, we're not really into giving much back. There's still, coming from a day trader's perspective, it really feels like hands off the steering wheel. You know? And I remember those first, when I really committed to swing trading, it was just a very bizarre feeling. And you know, there's this idea that to be a trader, we have to work very hard. And that being a trader is really about putting in the hours and putting in the screen time. I think it's about putting in the years, but I don't know, you know, there was also this feeling of guilt that like I'm not really working very hard.
Absolutely. That was a big struggle for me.
You know, it's like
when I became profitable finally. The next thing, because I've been doing all this testing and all this, you know, consumed with the market. All of a sudden, I'm not, and my trades take 5 minutes to look at. And now I'm like, what do I do? And then I start visiting the fridge, and I became a really good guitarist. But yeah, it's another problem that you don't see.
Well, you said there's a problem when, first of all, you have the guilt for not working very hard. And, you know, I mean, at least in America, you know, we have this idea that if you're not working so hard, you're miserable, like you're not fulfilling your purpose in life. And so you had to get over a little bit of that. And there's also I remember there was a point when it became very boring. And there were actually several points in my career that I can look back on where it became very boring. And I did learn pretty early on that nobody really wants to hear you talk about the market. You know what I mean? Yeah, I'm sure you know. Like you're doing your research, you have your patterns, you're thinking about all this stuff, and you want nothing more than to talk to people about it, and people don't care.
No.
People do not give a shit about. And it took me a while, and finally
Isn't that gambling?
Yes. You have that whole discussion, but you know, my wife, I don't even know if we were married at the time, but she was like, you know, I know you're really into this, but like I'm not. Like, and that was where you know, so you kind of internalize it in a way. But I remember where I thought, this puzzle's been so fascinating to me.
Yeah.
And now it's really kind of boring.
Yeah.
And that was a little bit of a, like, do I really want to do this? Then I realized, well, why are you in this?
Yes, absolutely.
Because and now, this is one of the things I tell people, like, if you gave me a resume, why do you want to be a trader? I want to work in a fascinating, fast-paced environment, the constant challenge of, oh, fantastic! You can engineer that. You certainly can create trading excitement, but that really works against making consistent money. Making consistent money, well, there's that word consistent, which kind of by definition is a little boring, or maybe a lot boring. And now, like you said, I mean, I can, when I'm trading stocks, I can page through 200 charts, spending not 4 seconds on each chart, and know instantly. Maybe, I don't necessarily know yes, but I know no, no, maybe, no, and then go back, okay, yes. But like, there's no way I spend a full minute making a trading decision.
No.
Like, it's very quick. And it's also, it seems a little irresponsible in a way too, right?
Yeah.
Because shouldn't we be doing due diligence and finding out what the CEO of the company had for breakfast? And no, you're trading a pattern. You're going to be in something for a few days, and you're just looking for what you understand in terms of market.
I think it's interesting you touched on the patterns being boring or the charts being boring, because I think a lot of people get into it because they think that they want it. Based on someone else's fantasy, and we find out very quickly that if you don't like looking at the markets, if you don't enjoy it, trying to solve the puzzle,
right.
You're going to have a very hard time.
Very hard time with your short career.
Very hard time with your short career, absolutely. And then there's the expectations. So, before we get on to the expectations, were there any other problems you had?
Lots of
big problems.
I mean,
other than that,
the big problems were really the transitions to new assets, and sometimes the pretty extended periods of losing. And I think I also, I was kind of drawn down some paths by some people who either I went to for mentoring or teaching, who probably really didn't have what they thought they had. And I think in many cases, it's the whole question of, we're very aware of all the scams out there, but I think that a lot of the people who I might look back on and say I was scammed, that statement is probably true, but I don't think the person thought they were scamming me. I think in many cases, they genuinely thought they had something of value. And, I can think, like, early on when I was trying to figure out the S&P thing, for instance, I worked with an old floor trader from one of the grain pits who had an S&P system that he claimed to be trading successfully. And the guy spent, I don't even know how many tens of hours on the phone with me, looked at hundreds of charts while he was teaching me a system, which you probably don't really need to do to teach somebody a system. And I think he charged me a total of $1,000. Like, from a scam perspective, there's no way that made any sense. But, I've since, with a little bit more knowledge, gone back, and I was not successful with his system. No. And I went back years later and looked at it, and there was no edge. And I don't believe that he was actually making money with it, but I do believe that he genuinely thought that he had a system that had an edge. So I think part of the challenge was kind of being led down some dark alleys by people like that. And I can remember there were several times where I just thought, I can't do this. No. And sometimes it was funny because sometimes those came after periods of making substantial capital. Right. I can remember, like, sitting around saying, does anybody, and the questions people ask me now, I wrote a blog a few weeks ago, does anybody actually make money trading? Well, I can remember asking that same question after I'd multiplied an account by several powers of 10, and then and held on to that money. So it wasn't like, then I'd taken it down to zero. I remember thinking, is anybody consistently profitable at this? And I had been, but I still was asking the question. So, there's this, I think the problem is, like, when you think deeply about things, you think too deeply sometimes.
Absolutely.
And trading is much more visceral than intellectual. It's not, and a lot of the marketing really highlights how intelligent you need. And a lot of that is, I think, kind of to make people think you can't figure it out. You know, like you can't possibly compete with our armies of PhDs and programmers, so you can't figure it out. But, you know, the reality is, yeah, this is important, but it's also a lot here.
Yeah.
And it's a lot hard, too. You know, it's a lot about just being able to get kicked and get up and go again. So I think some of the really miserable times I struggled were struggles that I created myself. I'm probably, you know, in retrospect, dealing with some mild form of depression, but I think, you know, traders, and we don't talk about this, right? You know, when's the last time you heard a trader say, "I struggled with depression"? You don't, you know, you want to give the persona of being confident, competent, and in control. And in fact, in our trading, when it's going well, we are. But it's not always like that, you know. It's always the up and down.
It's interesting your point you made when you said, you know, we're always sort of, can anyone make money trading? I love that, because we can backtest all we like, and we've got an edge, and we can do self-review, and we can review our trades. But one thing we never know is if the edge is going to change. Like, we can never know the future. So there's always this bit of doubt that says, well, I'm going for a drawdown.
Absolutely.
And am I going to be profitable after this drawdown?
Right. And you will, you know, the other thing, all of these things that nobody really tells you, as a trader, you will spend almost your entire life in drawdown.
Yeah.
Yeah. You know, and you have this idea that, like, you're just making money day after day after day, but even in the most consistently profitable periods of my life, I was still very consistently in drawdown.
Yeah.
Now, it may be mild drawdown, but it's still, you're clawing back to that equity high, and you are thinking, you know, so you are thinking, like, what if this changes?
Yeah.
And you know, and here's where we kind of get into my, like, semi-scientific mindset. My formal education, I was educated as a musician in college, and also had a degree in comparative religion. Now, that's actually something that I don't think I talk about at all, but there's actually an interesting thing here, because a major focus of my religious education was on what we call the Western mystery tradition, which is probably not something you're familiar with. But what this is the literature and practice of magic and alchemy, primarily being Western in Europe, and in the Middle Ages through the 1900s to present day. So when I came to trading, people were talking about all of these ratios and mysterious things, but I had actually a solid academic background in the things that they were drawing from.
Right.
So, you know, that may have been why it was a little bit more appealing to me at first, and that was also why I learned to do math.
Right.
You know, because I had one math class in my undergrad, and we called it Math for Poets. It was where we talked about really interesting math concepts, but nobody worked an equation. And it was more, we talked about how math made us feel, you know? So, and I knew it probably wasn't going to cut it as a trader. So as I was educating myself and learning about the markets, I was also learning about statistics. I taught myself calculus, probably not well, but I did. So, you know, I learned to look at data sets. I learned to understand what was in the data, and it was really driven by that question. You know, okay, so you think you have a pattern, how stable is it? And that was where I began to realize that all of this, even the best math, you're dealing with the edge of what's knowable. And so, but to push that edge back as much as possible, I took the patterns that I was trading and I went back. I looked at stock prices. You know, there are no currency prices far back, but you know, stock prices around the world wars, stock prices in the 1800s. I looked at commodity prices in Europe in the Middle Ages. And I found, of course, data availability is a problem, but I found the same patterns that I trade today, I think you could have traded on barley in the 1300s.
Right.
Now, does that mean that this is going to, and also the same simple things that I do today are really the same things I was doing in the British pound. And then ironically, the same things I was doing in the S&Ps. And I told you, I bled and cried for years figuring this out, and ended up back where I started. Right. It's not quite the 1, 2, 3 bottom, but you know, I mean, I fully disclosed everything that I do, basically I trade consolidations and trends. I wait for something to make a move and look for a pause and get on for another move in the same direction. And no matter, it's been a little bit of a head scratcher for me, because how many times, since I've been very aware of the dialogue, let's call it back in 2000, I had no real clue for the 5 years before that, but there's this constant discussion about how markets are changing and evolving. And in fact, one of the academics whose work I respect the most, I have a great deal of respect for academic research, but Andrew Lo, do you know that name?
No.
MIT, he is a practitioner, but also an academic. He has this theory he calls the adaptive markets hypothesis. The efficient markets hypothesis, which says that we can't make money trading with any reliability. But his approach is that markets evolve as ecosystems. So you have basically predators and prey, and the prey, like in an ecosystem, the prey animals develop camouflage, and then their population increases, and then the predators get better. So you kind of have this ongoing arms race that you do see in the market too, if you think about it a little bit. You think about the dark pools, you think about the algos, that there definitely is that evolution in the market. Markets have moved electronic, they moved away from the floor. People have talked about this constant dialogue has been what is changing, what is going to change, how, in the 90s it was the neural nets, now it's machine learning, different kinds of AI. How is this going to displace the human trader? And the really fascinating thing is the same simple shit still works.
Yeah. Yep.
And it's the same thing that I'm pretty confident I could have done in the 80s, in the 60s, in the 1860s. I suspect it's just some fundamental, and I don't know this, I always try to separate what I think I know from what I'm just guessing at. And I suspect this is really some element of how humans interact with risk and opportunity in financial markets. We've driven to some fundamental element of human behavior. That gives me some degree of confidence. I mean, I think I had the best degree of confidence I could possibly have that my approach will work to the end of my lifetime and beyond. But I don't know that.
No, of course
not. when you just got kicked in the head with a bunch of trades, and it's 4 o'clock in the morning and you're laying awake at night, that definitely is the thought you had.
Yeah.
Well, maybe I just got lucky.
Yeah.
Maybe I executed. I mean, like this is what goes on in the head, right? Maybe I've executed the literally tens of thousands of trades I've executed in my trading career, because it was a period I was a very active short-term trader, and maybe I just got lucky. I have a friend who is very statistically oriented, and he's a short-term S&P trader, and his trading record is 70 sigmas. And he still sometimes wonders, what if I got lucky? What if, and, he's had a few big blow-ups along the way. What if I just got lucky? And it's obviously stupid, right? But you will still ask that question, because it's, again, it's a very visceral thing.
Absolutely. One of the things that I think is a big problem as well is people feeling the urge to jump in and trade a bigger position size than they can afford. And really, it doesn't matter if it's $500 or $50,000 or $5.
Right.
They should concentrate on earning a profit, a consistent profit on that. I mean,
developing the skill.
You find that as well? I mean,
absolutely. I have worked with and coached traders in the past, and one of the common things, even from struggling traders, is help me get bigger. It's just baffling. I remember in particular one person who I really got very involved in his saga, because he was a very good person. He was working as a prop trader, and he was not profitable. He was not even close to profitable.
Right.
And he knew it. And we talked about all of these things, but it was a very interesting conversation from a number of standpoints, because he was not profitable, and he came to me for help, and every single thing I would suggest that he change, he wouldn't change anything. And, I would even, I'm not nice about things like that. I would say, like, what are we doing here? What did you come to me? Do you realize what's happening? And what have you, and he saw it, but he's like, I just got to read more news. Well, you could do that. But the one recurring theme was he kept wanting to get bigger.
Yeah.
I said, you are losing money.
Yeah.
What you are asking me to do is to help you lose money faster. You are a losing trader. Is there any doubt that you are a losing trader right now? He said, no, there's no doubt. So you want to lose more. Well, I think getting bigger. No. Yes, that is always the drive. Size brings all kinds of psychological problems.
Yeah.
And a lot of people say paper trading's worthless. I disagree with that. I advocate, with currency micro lots, you can trade so small, it's basically paper trading.
Yeah.
With stocks, if you back out commissions, you theoretically could trade a couple of shares of stocks. So like, if you're really wrong and the company goes out of business, you lose $40, $50. And I think that people kind of miss that step, right? You have a system and you want to trade with size. Okay, well, a lot can happen between point A and point B, right? So I think the way we bridge that gap is you have a back-tested system. So let's forward test that system. Let's paper trade it a little bit. And right there, you're going to see things like, my indicator was using data from the future, so it doesn't actually work. Well, great. You at the cost of some time, we've saved you money. But if that's okay, well then what's the next step? And here's where you trade very, very small. I say vanishingly small size. I want you to trade so small that you just don't care about it. And that's actually a problem if you don't care about it.
Yeah.
But what this should do, and the funny thing is, for somebody who's never traded, if you go into a currency market and you're risking $10, that's still an emotional thing. There's still a rush. But I think you need to do that enough that those emotions kind of settle down.
Yeah.
And you really mess that, if you really, really horrifically mess that up, you've lost a few $100s. It's no real damage, right?
Yeah.
And then you can work on increasing that size. But to go from the back-tested system and then, okay, I'm going to watch it for a few days. What's that even mean? I don't even know what that means. And then I'm going to start putting 10% of my account per trade. Why don't you just give me that money?
Yeah.
Just give me your account. Let me go buy a nice bottle of wine. Let's just skip that, because that has absolutely no chance of success. It's like anything else. You have to work up to it. It's no different than, it's obvious I don't spend a lot of time in the gym now, but if you want to increase your deadlift, there's a way you do it. And it's not walking up to a 500 pound,
No.
It's you do it the right way. You make sure all the technique is there. And you do it enough times that you develop the muscle memory.
You build the other muscles.
Right.
Yeah.
And then you do the thing. And with this, traders aren't willing to do that because you just want to get to the point where you buy the mansion and the helicopter.
Absolutely.
And it doesn't work.
I agree with you. I think sometimes it's a struggle to not be emotionally triggered to the trade when you're going forward, and they want to have that feeling of being in a trade with real money. Yeah. And I would advise the same thing, to trade small if you have to.
And all these stupid sayings like you got to be in it to win it. Yeah. Well, you're not going to win.
But then there's also the fact that with that, if you are trading so small that you don't really care, it's really important you have accountability, I think. Because
some social accountability, perhaps, right?
And I tell you what, that can have a massive impact, because if you're trading so small that it doesn't really matter, but yet you've still got to treat it like a business.
Absolutely.
If you can do that for 6 months, 8 months, maybe 12 months, you're going to have a very, very strong frame of mind.
Absolutely. You have built the discipline. Yeah. I like the accountability, and this is where working with a coach can be a good idea, but it's also where even just sharing with a family member.
Yeah.
You can tell a family member, I know you don't care about what I'm doing, but look, I just want you to look at what I'm doing and make me tell you that I'm doing the right thing. And if I'm not, hold me accountable.
Absolutely. I always say this to people. I say, and not only going back to earlier when you said it's a very lonely game because no one wants to hear about it.
Right.
What I find is if you actually explain something, like I became a better trader when I started teaching.
Absolutely.
Because you release information that's just in your subconscious. Yeah. And it puts your mind under pressure to actually be correct in everything you're saying. Yeah. And I find like children, my kids, I'll talk to them about it, and they'll ask questions that are so naive and innocent that I have to really think and go, right, I really need the answer to give them. And I think I really encourage people to actually, that whole self-accountability to talk about what you're doing.
And teaching's a very good thing. And the idea of explaining something to a child, if you can't explain something to a smart kid, you don't really understand it.
Yeah, exactly.
Even even calculus. You know, if you can't explain acceleration to a kid,
Yeah.
you probably don't really truly understand it. You know, maybe you're not going to transfer 100%, but and you know that to me, like, I've always really enjoyed teaching. As a musician, you know, when I graduated from college, and I was like, how am I going to put all of this together? Well, I guess I'll teach. And I thought, you know, that. And then I started teaching. I was like, wow, I really enjoy this.
Yeah.
And I was surprised how much I enjoyed it. And so ironically, when I was, well, I mean, actually probably not, it's probably a good thing. But that first phase of my trading career through the British pound, I really didn't, I was taking in information. I wasn't really teaching anybody. I didn't have anything to teach. I didn't know what I was doing. It's also a problem, you know, social media, there are a lot of people teaching who don't know what they were doing. And then when I transitioned to the S&P and struggled for more than a year at first, I knew that I had enough knowledge from what I'd done before that I shared and I taught friends.
Yeah.
And, you know, I was open, you know, hey, I'm really struggling with the S&P. It's like, you know, I don't know if you really should listen to me, but here's what worked for me. And then I had the experience about the time that I started to get some momentum with the S&P day trading, that a lady named Carla in Germany, who I had taught to day trade, a single mom, had made enough money from what I had taught her that she was done.
Right.
She was checking out. She quit her job, and she's like, she basically was like, I'm going off the map. You may never hear from me again.
Awesome.
And I thought, well, you know, first of all, like, that's really interesting because her success was much greater than mine.
Yeah.
And we talked, and you know, you always wonder, are people lying? And
you
know, she showed me account statements. Like, I don't think she was lying. She made a lot more money than I did, starting from less money than I did. And that was the point where I began to realize that I did have something of value. And I began to realize, like, how touchy all of this was. You know, like, and I'm not saying that very well, but like, it's not something that you can really it's more of a transmission. Yeah. You know, like, it's more of giving somebody a framework than it is telling them exactly what to do, because her results were so different than mine. But it also, of course, increased my confidence. But then the other thing that I realized was, and this has driven a lot of my blogging and writing the books, and even a lot of the work that I do today, when you teach somebody, it's really hard for you to tell somebody the right thing to do and then to go do something stupid yourself. Yeah. It makes you better. Of course, it organizes your thinking. And you know, I do think I have people always look at the frameworks and the way that I've laid things out, and people say, you know, wow, your work's amazing. I've never seen this done like this. Well, the reason that it is like that is it got that way from me fumbling around teaching people and say, okay, well, you know, this, and really thinking. So it's made me logically order my thinking, but it also has had a tremendous behavioral impact, because I remember when I was teaching early on, and then I wanted to take the impulse trade. I was like, you know, like, how can I? And then, and so it makes you better in every way.
Yeah,
it's this big virtuous circle.
Absolutely. My trading, I mean, my trading became a little bit worse when I started teaching, because my focus, I was explaining what I was doing, but then at the same time, I was so accountable. All right, so we've talked a lot about mistakes that traders make, and we've all done them. You know, we have really all done them. We did have a question from one of our members, Naomi, actually, and she said, what would you say is the most important thing to focus on in that first year?
You know, people always say, what's the most important thing in trading? This is a good question, because the answer to the most important thing in trading is everything's important. Yep. And in fact, if one thing is not working, you're not going to be successful. Most important thing to focus on, what you want to drive toward, is consistency. How you get to consistency is, I think you have to have an edge first. And I think that's a problem. You know, like, if somebody starts just buying touches of the 15-period moving average, you know, on its own, like, that's probably not going to be how so you need to make sure that what you're doing does have an edge. And if you can't be reasonably sure of that, then you don't pass go. You don't even start. you could eat up a big chunk of the first year just verifying that you have an edge.
Yeah.
And then from that, I think we can talk about all of these things we need to work on, all of these goals we want to achieve, but a lot of it really comes up to exposures, multiple exposures, times at bat, as we would say in America.
I listen to Gary Vee.
You just need to do lots of trades.
Yeah.
And now, this doesn't mean forcing trades, and it means in context of your trading style. So if you're a swing trader, if you want to be a swing trader, don't day trade just so you can do 20 trades a day. That's stupid. But once you get this initial stage done, you get your trading plan, you get your framework, you've moved through that stage where now you're ready to verify on very small size. You need to keep doing that. You need to be as consistent. At the end of that first year, if you're a slow-moving trader, you probably need to have 20 trades. If you're an active trader, maybe it'll be more, 200, more even. So you just need to kind of keep chipping away at it, and it's going to be discouraging because you're going to go through this roller coaster where you think about buying the mansions, and then you're going to think you're going to fail and it's hopeless, and you kind of have to be prepared for that up and down. And what you need to do is, people say, I want to be a professional. What does it mean to be a professional? If you think about it, when I was teaching musicians, I had a very simple definition. Being a professional means you show up for work. Yeah. It means you show up for work the next day, no matter what happened the night before, no matter what you had to drink the night before, no matter how bad your set went the night before, you show up for work the next day. And it's kind of the same thing as a trader. You can feel as bad as you possibly can about your prospects. You can be as optimistic. You still show up for work, you still do the thing. Now, with one caveat to that, I do think, and maybe it's a little different for a developing trader, but anytime you have an outside stress in your life, like some of the classics, divorce, death in the family, new addition to the family, a new pet even, real estate problems, anytime you have anything like that going on, you probably should step back from trading. Yeah. If you're a systematic trader, maybe you can keep going. But if you're a discretionary trader, I had a situation recently where we were piloting a system with very small capital, a kind of active trading in currencies I hadn't done for a while, and the numbers were just astounding, absolutely astounding. And then my mother got sick, and not even like the kind of sick where I could be like, is this going to mess with my head? No, I don't think so, because we know this is probably going to have a good resolution. It's not really taking a lot of my time or emotional energy. I think I'm okay. And then the numbers on my discretionary trading plummeted. And I look at those two phases. It's very interesting because it's a recent isolated example from an experienced trader where there's not significant risk involved, where still this outside stress torpedoed my trading. And so I think when you do have something like that happen, you want to scale back your exposure. Yeah. But if you're learning, maybe you keep pushing through that. I don't know. I do think probably in that first year, the biggest thing you want to do is you want to drive toward that consistency, and you want to stay exposed to the market without losing a lot of money.
Absolutely. I think, just before we go off this subject, I think a lot of people sort of overestimate what's achievable in that 12 months.
True.
And then they figure out, actually I have got to put in some work here because it's not as easy as I thought. But then because of that, then sort of they underestimate the 12 to 5 years. So, and as well as I do, the results are.
Well, and I think I'm guilty of that because I always, I emphasize the challenges. Somebody wanted to do an interview with me recently, said, what's the topic of the interview? And basically I presented a title, something like Trading is Hard. And the interviewer correctly said, maybe that's not the most compelling. Maybe we're going to have trouble selling that. And I thought, okay, he's right, but I'm right too, but he's also right. And I think that it's very easy to, because I don't really think about the success. That's kind of a funny thing. Like, and maybe it's a little bit away from motivation, because I know like the points in my life when I've gotten very caught up in my success, it's led to hubris and it's led to bad results.
Yeah.
So now I just kind of focus on not being stupid as much as possible. And I actually say it pretty seriously. Don't do anything stupid, and the results kind of take care of it. The money that you make is almost, to me, like a pleasant surprise.
Yeah.
And it is a surprise, again, it shouldn't be, but it is like a pleasant surprise. But the downside of that is that when I'm talking with somebody learning to trade, I may just emphasize how hard it is. And the reality is, of course, you can change your life. You can. I've told you about Carla. You can completely change your entire universe with your trading success, but it's probably going to take longer than you think.
Absolutely.
I guess that's the message.
So the message there really is concentrate on not losing money rather than what you can earn.
Right.
Because if you can just concentrate on not losing money or protecting your money you've got, then it's inevitable. The results are inevitable.
You also you have to be okay with the losses. Like that's all. I mean, I know it's not what you're saying, but like you see people get into trade and they put their stop in, but they're not really okay taking that stop. Like on the individual trade level, you have to be totally okay with getting hit on that, and maybe on the next trade, and then it's possible 3 or 4 trades in a row.
Absolutely.
But overall, if somebody comes to me and says, and I hear these stories all the time, can you help me learn to trade? I've lost $2 million learning to trade.
Wow.
It is not unusual for somebody to say I've lost 300, 500,000, and I've heard many people say I've lost more than $1 million.
Wow. I lost about 40 grand and that hurt.
Yeah, I mean, I think about my first account, I think was $2,000. Now, it's $2,000, we talk about leverage, right? $2,000, keep in mind I'm paying $100 in and out per commission. So like my chances of success were absolutely zero. And I remember losing that was, and even then, like that wasn't a lot of money to me, but the pain of losing that money was, so I can't imagine somebody, and sometimes these stories I hear from people are like, I lost $2 million, I made $1.5 million, and then I lost 2, so I'm in the whole 500. That might almost be worse than just losing $2 million, So somebody who has that kind of damage, then we need to go through this whole therapy process of building up. So if you can avoid that damage, if you can get to the point where you can get through that first year of trading, and you kind of plan to do it, so you spent whatever you're going to spend on your data, on commissions, on whatever educational resources, and I think it's worth spending some money. Like there's some good stuff out there. Figure out what to spend some money on. So what have you lost that first year all in? A couple grand, 10 grand, whatever. You got to be okay with that.
Yep.
But you really got to limit the damage. You need to come out of that first year where you are, because maybe a second year that's rough too.
Yeah.
But you definitely want to avoid the damage.
But it's like you say, it's the cost of doing business.
Absolutely.
It's there's drawdowns, which we're all going to have losses, and then there's forced drawdowns, which are losses.
Right.
And the proper drawdowns are just the cost of doing business, right? So it's like, I think people see it as it's different to other businesses, because in a normal business you might have an overhead as an office, and then some staff, and then some insurance, and then some tools or some kit, a printer, and you're doing a project, you're getting the profit, and then the overheads are coming out the top, right? So it's one transaction. Every time you do a job, you get the profit off the top, and then you get the profit and loss. With trading, you just might have the overheads for a month, right? And then you start having, and it's
potentially even a year, a couple of years even. You may have.
Absolutely. So you see lots of people online rubbishing different systems, fundamentals, technicals, and I just want to know a bit on your thoughts on that and what style of trader you are.
Well, so Jack Schwager said that there are thousands of ways to make money in the market. But I'm misquoting him, but then he said the irony of this is, or the paradox is, that all of those ways are hard to find. I think there's truth to that. There certainly are people who make money as fundamental traders, as spread traders. There are all these different ways to make money. I do think, though, that there are a lot of people who don't understand why they make money, which is okay. I mean, to me, that would concern me, because then we would come back to the question of how stable is my edge. But I think there are a lot of people who are teaching, even that if that person hasn't really investigated how they make money, they can't transmit it. They can't teach. If you think, for instance, back on the floor, there were people who wore the same tie after it would fall into shreds because it was their lucky tie. Now, somewhere in their head, they probably knew, but there's this superstition and I think it's like that with indicators and with methods and things. So I think as a developing trader, you probably want to be as objectively minded as possible. You probably want to, I think of not the religious parable, doubting Thomas, the story said, let me put my finger in the hole. You want to have like that degree. Let me touch it. Let me see the numbers. I can't trust your system until I've got my hands around it. I've run it on some data, and then we've gone through this whole process of that we talked about. So I think you want to be very critical as a developing trader. I think you want to be maybe a little bit cynical, and it gets you into potentially, and I've been there, it gets you into kind of a dark place where you find yourself contradicting a lot of approaches, but it's also really you asking the question, what kind of trader do I want to be? What is going to work for me? And for me, it's been a combination of mostly pretty simple tools with an awareness of kind of some bigger picture structural and macro factors, but the actual patterns I trade. And, this is no secret. I disclose all of this in many places, but, I'm basically trading flags and pullbacks and looking for some places where the rubber band is stretched a little bit too far. And that's what works for me on my time frame. I do think one of the misconceptions is that all patterns work on all markets, all time frames. The reality is stocks, for instance, mean revert more than currencies. So if you're trading stocks, you're naturally going to be inclined to fade a little bit more. And this is why, I told you every time I went into a new market, there was kind of a speed bump. And some of these were objective realities. Like as a day trader in stock indexes, you probably make most of your money on the short side. So you get oriented to thinking about being short. If, however, you want to hold stocks for longer than a few days, you're going to have a rough life. So you, as a as a slightly longer term stock trader, you need to reorient that. So, I think when I think about learning this from scratch, it's overwhelming because
it is.
You got to put all. I mean, even just what I said here, like I think that's a profoundly important thing. But if I'm trying to figure it out, like, how do I know? I don't even know what I want to trade.
And people might just test one pattern on one market and then just assume it works on other markets, and they don't know where they're
one
bleeding.
pattern on a few. Like I saw a guy did a statistically very valid test of an intraday pattern on a month and a half of data.
Right. Yeah.
Okay. Yeah. And it did happen to be he had tested it on currency futures and was then going to trade it in the spot market. I think you could probably get away with that, but I'd want to ask some hard questions. Yeah. But we certainly need to look at so it's a lot of questions.
We never know what's going to happen next in the market.
Correct.
Right. We know that if a certain series of events take place in the market and a certain pattern is formed, we know the probability of what's likely to happen next.
Right.
What do you define as having an edge? Is it just that, or is it a bit more?
I believe the pattern itself must have objective statistical edge. I believe so, and this goes back kind of to the discussion we were having before, like, could I give you a pattern that has no edge and you make money with it? I won't say no. It's possible. But for me, and certainly could I give you a pattern that has an edge and you not make money with it? Absolutely. We see this. So yes, there's the question of edge in relation to the pattern, the objective statistical reality of the pattern. There's also the edge being the trader and the framework and the everything from that trader's whole approach to life and the things that you will do and will not do both in the market and as a human being outside of that. I think if I understand your question, I think the answer is kind of yes to both. But I do think the pattern, and maybe that has been a flaw in some of my work that I've gone through. And if I cannot objectively verify the reality of the system, I throw it out. Yep. So I don't use moving average crossovers. I don't use Elliott wave. Some of these things, is it possible you might have something that might not have an edge itself and might in combination with something else? Yeah. It is, and I've tested a lot of those things and also found no edge. But I have, and this is what creates my intellectual, comfort zone, is at least having the idea that the pieces that I use on an atomic level have an edge. If they have an edge, then it gives me a little bit more room. Like, I can maybe screw it up a little bit more if I know I'm trading with a real edge. So that's just how I think about it. I don't know it's the only way to do it.
Lastly, then, before I go on to some questions that we've had for you, when developing your trade plan, then what is important to consider?
At least you want to have a clear definition of what you will and will not do. That's the point of the trade plan, because you're going to evaluate your trading with the question of how well did I follow my plan. So if your plan is really vague, then you don't have anything to evaluate. The problem, of course, is there may be an element of discretion, and how do you nail that down in the trading plan? So I think you certainly need to deal with the obvious things of how you get into a market, how you get out of a market. Will you add to a trade? Will you scale in, scale out? Mechanically, how will you move in and out of a trade? But also the kind of business plan things. What markets will you trade? What kind of risk will you take on? When will you stop trading? And when will you, like these things we talked about with the life stresses, like that should be in your trading plan. If this happens, I will either reduce my risk or eliminate, or stop trading for a while. Your trading plan also should probably include some steps for innovation. Here's what I'm going to continue to do to research. Your trading plan should include, it's kind of a big thing, right?
Yeah.
It should include if the electricity goes out and the internet goes out, how will you call your broker to get out of your position? So there should be kind of disaster recovery, things like that. There probably should be, it's a little bit of fantasy, you want to be careful about, you've probably done them, the spreadsheets. If I make this amount of money, my account will grow to this size, right? And we know it doesn't quite work like that, but you probably do kind of want to have some plan about where do I want to be in 3 years, where do I want to be in 5 years. I would include my data providers in my plan. I would include probably like what do you want to do as far as community, how are you going to interact with other traders. So I think the trading plan that you will use every day, which is what I started with, the simple pattern. Here's where I get in and out of the market. That's probably a single sheet of paper. That's something, that's not rocket science. And it should be really clear, so you could sit down with a coach and say, I did this, I didn't do this. Yeah. But then this bigger plan, I think all of this matters and it needs to be addressed probably sometime in that first year, and you're going to be revising it as you develop as a trader, but I think you kind of need that bigger picture business plan behind your trading too.
Yeah, and it is a business plan.
It is.
That's what it is.
Yeah.
People don't see it as a business.
Well, it's a business. If it's not a business, it's a hobby. It's fine. It can be a hobby, but hobbies cost money.
Yeah.
That's but like the tax definition of a hobby is it costs money. And that's fine, but that's not why any of us really get into the market. So if you do want to pull money out of the market with any degree of consistency, it's got to be a business.
Okay, so we've got some questions from viewers that are looking forward to the answers. First one says, being a technical trader, how much attention do you pay to major news events?
I work hard to ignore them. How much do they affect the day-to-day? Not at all. I write institutional research and advisory, and you go back, Brexit, Greece, Turkey, Italy, all of these things that people have been stressed out about. As an advisor, my job has basically been telling people, not from a light standpoint, but don't worry. Don't worry. Because so much of the news, and it's interesting the question says news, so much of the news is about generating emotion. It's a business like anything else, right? And their business is to get people reading news. So the way you're going to do that is to make you think that the asteroid is about to hit Earth and the coming financial crisis, but that's not how you trade and navigate markets successfully. So I think by the time you and I know about it, is there an edge to trading news? Yes, and that edge belongs to the silicon brains. That is all processed and parsed on at a speed. The trade's over by the time by the time you can even read it on a screen. So I just do not think there's an edge to the human with news.
I agree 100% with that. Any tips on identifying false breakouts?
Most breakouts fail. Most breakouts are false breakouts. There you go.
There you go.
Yeah.
Easy one. Okay, and this is the last question from the viewers. If you had to give one piece of advice to a new trader, what would it be? I know it's an open-ended question.
It's a very open-ended question. I guess your challenge very quickly is going to be to decide if you really want to do this. And I can't. I told you how I started. I can't criticize anybody for being drawn to this by sexy marketing and by thinking about what island you're going to buy in 5 years. You want to solve the puzzle. You have all of these reasons for getting into the market, and you're going to realize pretty quickly that most of those are probably crap, and you're going to realize it's harder than you thought. But then you're going to realize what is actually there and the potential that it is actually there. So I don't think there is. I had a guy who I worked with for a while, and he said, you did more for me than anybody else I ever worked with. You've been through a lot of mentors. He said, you showed me I do not want to be a trader. He said, I will never, I closed my accounts. I hired an investment advisor to manage my retirement account. I will never touch financial markets again. He said, you changed my life. It's the best thing that ever happened to me.
Absolutely. I've had the same.
And the first time he told me that, I was really not pleased to hear it. But then I absorbed what the message actually was.
I want to say, if there's ever an educator that turns you off trading, they're a good educator.
That's probably true. But what it was with him, the reality of it did not line up with his expectations.
Yeah.
So that's going to be your challenge as a developing trader and I will tell you, when you start to grasp the reality, it's going to be very disconcerting, because you're going to be bored. You're going to face all of these hurdles, all of which are conquerable. You certainly, but it's just when you see what's actually there, and then you got to decide if you want to do it.
Yeah. If
you want to do it, you can do it.
And one thing with the markets, I'll say, is you have to just be happy with self-accountability, because there's no one else to blame, is there?
Well, that's the thing. Yeah.
With a shop, you've got customers, geographical location, tax laws, and all the rest of it, overheads. With the markets, if you're losing money, it's your fault.
But it's all baked into so much of even the things we say, right? Oh, they got my stops again.
Yeah.
Well, they didn't. And there's this big debate about, are markets manipulated? Of course, markets are manipulated. Every market since the beginning of humanity has been manipulated. Every market's manipulated, and if you can't just accept that and then work within that framework, then you can't be a trader.
Absolutely.
And so it's just, it is putting the responsibility inside yourself, which also is a pretty uncomfortable thing to do.
Yep.
And it's not something we do in normal walks of life.
No.
I think you can be a very happy person and never do the degree of internal scrutiny that it requires to be a trader. But if you're going to be a trader, you're going to face that. And it's probably, actually, I'm glad you said that, because it'll change the way I think about some of these things, because a lot of those early struggles are probably really, as much as anything, that person accepting the internal accountability.
Absolutely. Yeah.
Good point.
So just before we finish up, tell us a bit about what you're working on at the moment.
Sure.
And how people can reach you as well.
Okay, so you can find my blog, adamhgrimes.com, and you can also follow me on Twitter. I kind of use Twitter as a way to get out everything I do, so I'll link to everything I do there. We have marketlifetrading.com, which is focused on the, let's say, short to intermediate term trader, focuses heavily on US stocks and currencies and options. I also have an institutional advisory service that crosses the line. It is for the hedge fund trader, for the pension manager. It's also for the individual trader who's working on longer time frames, and that is Talent Advisors. So, and like I said, you can find all of that from my blog. My blog is kind of the nice central hub that all of this hangs around.
And if you haven't read the book, The Art and Science of Technical Analysis, I highly recommend you do. And we have a copy here that Adam is going to sign for you. And there's a chance for you to win the book for free. All you have to do is just like this video, comment on the video, and share it on your social media platform. And what we'll do is we will pick a winner at random and we'll send it out to you for free of charge. So go and do that. Adam, it's been a pleasure. I could just literally talk to you for hours and hours and hours.
Thank you. I've enjoyed it.
Thank you very much.
Thank you.
And take care. All right, guys, hopefully you enjoyed that video. It was a long one, but I think it's really, really valuable. There's some great insights from Adam there. And just to summarize, really, the things that I personally see time and time again from talking to these guys is that it's not about that golden system. It's about the process. If you want to become a consistently profitable trader, it's in the process, going about it in the right way, taking the right approach. Adam was talking about, how he got into it as a get rich quick. I know many, many people can relate to that because that's how most people see it. But then it's about having those realistic expectations, getting around people that are going to hold you accountable, having the self-accountability to put the work in and then go and learn in the right way, understand the fundamentals, and then take that learning curve, set the next 12 months to 2 years even to learning. And then once you learn the right way, then you can have consistent results. And I think that's really important. As I said before, we're working towards becoming consistently profitable traders. Well, we need to be consistent. So hopefully this just really gives you that belief transference that you're on the right path. You don't need to jump system, jump ship to ship. And it helps you appreciate the fact that everyone's gone through the same thing. And if you just listen to the underlying message here, you're going to see that it's more about the process than focusing on the system, the magical system. So hopefully you've enjoyed this video. If you want to see more of these, put some comments below. And lastly, if you want the chance to win The Art and Science of Technical Analysis by Adam Grimes, this is a signed copy. Sign this copy as well. So if you want this copy, like this video now, comment below and share this video on your social media platform, and then we're going to pick a winner at random, and that book will get sent out to you free of charge. So give the video a like. Thanks for watching, and I'll see you next time.